Welcome to another Block Chat. On the brief today, we will be talking about something that I understand nothing about. Actually, this is what was suggested by the team. So, we had an internal chat, and people want us to talk about the impact of the Bitcoin halving on RWA, our industry. Dennis, how are you?
I'm good. I hope that after the session, I'm still good. I think it's a
Now, the
it's a
best
hard
thing about
topic.
it, guys, is that I'm against the whole subject, and yet everyone's excited about it. And Dennis understands it. I understand very little about it. Dennis will be informing me and you about it today. Maybe there's some of you who understand it more than us, even. Please voice your views in the comments if you see things that we don't see in it. Yet, Dennis will be explaining it as much as possible to me and you. And then let's see if he's able to create a positive impact on doing that. Dennis, what is Bitcoin halving? Let's start with that.
Okay, sure. So Bitcoin, everybody I think has heard at some point or another about Bitcoin. It's the first blockchain or the first implementation of a blockchain. Um, and how it's designed is that it rewards miners, which are miners are basically computers run by software that secure the Bitcoin network. Basically, every transaction is secured by a miner doing a computational errand. And this computational errand is rewarded, and it's rewarded in Bitcoin. And with each block, which is approximately 10 minutes, a reward in Bitcoin goes to the winning miner. So you can treat it as a kind of a lottery of sorts. But to participate in that lottery, you need to play by certain rules as a miner. And the rules are that you can buy multiple lottery tickets, let's say, and the more the hash rate, which is in this analogy the lottery tickets, the more hash rate you have, the higher the chances of you winning, getting the Bitcoin reward and mining the next block. And so every 10 minutes after 2009, when Bitcoin started, has been rewarded with 100 BTC tokens. So 100 Bitcoin went to the winning miner. And it was quite easy to mine Bitcoin at the time because it was done by people like you and I with our computers at home.
You know, there's somebody who had a small rig that he done, and he used to mine in Starbucks. So he used to go to Starbucks every day, use their internet, and today you need a huge compute to be able to do any mining. So
Exactly.
is
Now,
that the result of the halvings?
I think so, yes, as well. So the halvings do impact, do have an impact on the tokenomics of Bitcoin. So, like I said, it started with 100 Bitcoins per block. It then halved into 50, and then it halved into 25, and then it halved into 12.5, and then it halved into 6.25, and now it's going to halve into 3
0.125
point. Yes, exactly.
or 0.075, depending. It was 6.125, so now, or
It was,
6.5.
yeah, yes,
Yeah.
exactly.
So it's
And
3 Bitcoins. Yeah.
this ensures basically that Bitcoin as a system can run forever because the halvings will happen forever, and basically the supply, which is capped at 21 million, will never be reached because it just comes near to this number, but it never touches it, right? And so this function basically ensures that this system Bitcoin can kind of survive forever. And there's a genius in this setup, because the supply of the total uh, is decreased every 4 years approximately. Um, and uh, and with this, the value of Bitcoin is supposedly increasing. Why? Because the amount of computer power, and by that I mean as well, the amount of electricity spent to mine a block stays the same, or
Yeah.
even increases, because it's even more difficult. It becomes more difficult with each new block to mine the next block.
Yeah,
So
and the capex increase as well because the level of compute they need is different.
exactly,
Yeah.
exactly. So so I think, that in itself, because Bitcoin, I mean, it's hard to say Bitcoin is a real world asset, but when you are evaluating, it is tied to electricity resource to electricity costs and computing resources. So that's assets that you need to acquire in the real world. And in essence, Bitcoin is tied, its price, it's on one side tied to speculation and, from an investment point of view, but on the other side, you also have these very tangible components that you can't just ignore.
So, as a summary, mining a Bitcoin is costing more with time, and the amount of Bitcoin you're being rewarded are going less.
Yeah.
So generally, it should impact the price of Bitcoin positive. Now, I do not need to agree with that. I do not need to agree with the value that Bitcoin can hold, and the value. I've never bought a Bitcoin, by the way, in my life, I probably would never buy. Now, however, the Bitcoin, there is genius in Bitcoin, regardless if I agree with the value or I don't, regardless if I agree with the utilization of technology, the cryptography, the whole market that Bitcoin spread has sparked has so much utility, in my view, in the future, and specifically when it comes to real world assets. Now, the team were curious and passionately discussing the impact of that on the industry. Do you think, Dennis, that halving should have an impact on the industry? And not to ignore that, yes, the rise of the value of Bitcoin does have an impact on the industry, for the good or for the bad. When the crypto market is going up, the RWA craze is supported. Now, that doesn't mean also that we support the craze, because we believe everything hyped fast drops and crashes fast. But when you have strong fundamentals, I believe the craze comes to establish and allow people to establish those fundamentals. So we have amazing fundamentals with RWA. Real world assets, regardless if digitized, tokenized, or not, that's fundamentally the world economy and what it runs around. Um, Tokenizing and digitizing real world assets gives it another level um, of liquidity, transparency, value. Now, the crypto industry, as much as it's interlinked, whenever a boom starts, which there is one of that started few weeks or months ago, and I hear that it started now dwelling, and but probably people say it's a blip down and then it will boom again, and then that's what happens, which may be logical, yeah, from a trading perspective. Um, Regardless, it supports the industry, it supports the utility of the technology. In my view, the utility of the technology is huge long term, and it will impact all of us as we live. And today, you still can purchase those real world assets, and your father can trade them without understanding the digital side of it. In my opinion, our kids will not be able to do so without it. And not to say that they will need to be a crypto or tokenization or experts in the technology. It should be very simple, and it will end up being there. When we purchase stuff from Amazon today, we don't really think about the logistics and how they make sense of it, as well as the technology and the robotics behind it and the AI that suggested it. and the AIoT that impacts it, we don't. We just get it. So, Dennis, what do you feel will be the impact of the Bitcoin halving on RWA? And that's
That's
not the most difficult of the questions. There's much more
okay.
coming.
Why are you putting me on the spotlight here?
Yeah, yeah.
Uh, well, in my view, if you think of um, Bitcoin as the has like a 55% dominance in terms of the crypto market. Whenever you look at these indexes, um, it used to be much higher, obviously before, and then with Ethereum somewhere going live, it started dropping. And at a certain point, Ethereum and Bitcoin were very close to something that was called at the time the flippening, but it never happened. And then Bitcoin kind of regained after the ICO craze was over. It started regaining its dominance in terms of the crypto market. And now you have like benchmarks of, I don't know, taking into account the top 100 or top 150 coins by market cap and liquidity, and comparing them to Bitcoin. And it still has like a 55% dominance. With the halving, usually that dominance increases. Why? Because Bitcoin becomes a more scarce asset, and you have kind of a on the other side a push towards higher prices. Higher prices create news highlights or news titles, and then those news titles kind of get into the also on TV, etc. And then you have retail market reacting to it and starting to buy because of fear of missing out, and that kind of pushes the whole market then up, um, usually for around a year after a halving. That's at least historic data what it shows us. I think the direct impact on RWA, it's not going to be really visible so soon throughout this, except let's say it's going to drive attention to other lower cap, obviously tokens and coins that might be more attractive as a speculative investment for people than Bitcoin, because Bitcoin with ETFs is becoming more and more institutionalized. And with institutional adoption, I don't know what's going to happen in terms of, with when we reach, the new highs of the bull market, and then prices usually start dropping, and the crypto markets start crashing, and everybody's starting to scream that Bitcoin is dead. That was in the past. I don't think now with institutions that this kind of headlines will be so drastical. But there might be other things impacting the market, wars or turmoil in other markets, different stuff that can impact. Um, in my view, the real world asset sector, which is really small at this time, um, especially if you exclude stable coins, like that's if you exclude stable coins from RWA, it's basically miniature. Um, it's gonna have more attention through it probably, but as well more retail with certain funds that have been created on chain through the effects of the Bitcoin halving. And people generally like to spend or invest the money that they create with things in a more speculative way, in things that are more tangible and make more fundamental sense to them. And real world assets might be, and then the products that this sector is kind of offering might be something that would spike an interest for these investors to look into.
You know,
That's
while you're
my thought,
speaking
at least.
now,
But
while you're
not,
speaking
yeah,
now, I got, I agree with a big part of it, and I got a thought of yes, how that may impact. Actually, with every boom, with every hype cycle, what happens is that new people start entering this because of FOMO and greed and speculative drives and animal spirits. They enter the market, and the people who used to be part of the crypto world 10 years ago were probably the digital nomads, while people who are entering the market today may be people who are more entrenched into the fundamentals of the economy. They look at intrinsic value of stuff. And if they're entering the crypto market, they will be more aligned with the values and the moats that RWA projects do present rather than any other meme coin or so. So maybe what will be happening is, yes, people are coming into the market because of the hyper growth of some of the tokens that may hold value or hold no value, yet may after that be introduced to something that sits within that market, yet they are more comfortable with, and end up buying either into coins or tokens representing RWA projects or tokens of assets that have been tokenized. And in both situations, I believe it's very positive. Yeah. Do you believe that it would have a negative impact or no? Only positive one, if it does have a major impact.
I think there's always two paths, but I think that the positive one, I think what you mentioned now, it makes a lot of sense. Because obviously the people entering Bitcoin as an investment today might be people that have entered Bitcoin before, but then exited and forgot about it, and made some profits maybe with it, exited and didn't care about it, and they would come back and then see, oh, now there's a lot of things changed since the last time that I looked at this, right? And those people are probably those who are more in line with investing in the real world and finding returns that make economically the most sense, that they see that there's a certain value behind, because I don't know, there's a business running, or there's certain revenues being generated. Like real estate is a very, very easy to understand from uh, for a general person, easy to understand business model. There's a property and there's somebody using that property, and the usage of that property costs. It's called rent, and it creates returns for the owner. And it's as simple as that.
And it cash flows.
And
So
and because of it, it cash flows, and it has its own value, and that value reflects based on how much demand for this type of real estate assets there is in the market currently or in the future.
so
And
can I
that's it.
compare? Let's sorry, continue, Dennis. Then I'll come in with my thought.
Yeah, and I just think that this is something that resonates with every human being in the world. Everybody lives somewhere, and everybody is either renting or owning a place to stay. This is like a common thing that everybody has. Even if they don't have a bank account, they still pay rent
Yeah,
or still live somewhere, and they had to spend some money to live there, right? So there's the cost of using space for yourself, is something that we all share.
yeah.
And I think whether you decide to invest in crypto or not, this is a truth that nobody will change. And so whenever there's somebody who discovers crypto for the first time, or maybe they are rediscovering it, or they're bringing this experience to crypto, and they're saying, what about real estate? Is it possible to have real estate here? That's something that I think everybody thought of. It's not something that we would be saying, oh wow, we invented this. No, this is like one of the first thoughts that anybody who discovered Bitcoin, and then ultimately other crypto assets, has thought of. So I think it's right there around the corner for mass adoption to happen.
So let me here clarify a few things. So if somebody is buying tokens in a project, can we compare him to somebody buying shares in a company, equities in a stock market?
Um, Equities in a stock market, yes. I would
Okay.
I would say that it's similar, because because you can exit through a public market. However, private equity, totally different. I'll
Yeah,
give you an example.
go.
One of the investments that I have, it's 6 shareholders, and 2 shareholders have expressed interest that they would like to exit. Now, that exit can happen by selling their shares to somebody else, but kind of the other shareholders need to kind of agree that this happens, and the right of first refusal goes to the shareholders. And now let's say that there's a negotiation happening, and let's say that the shares value would be, I don't know, 100 per share, and or and the offer, they would like to exit, but they would sell it at 100 per share. And then the other shareholders would say, hey, you know what, for this price I would sell as well, so everybody can put their shares on sale.
Yeah.
But the question is how many buyers there are from the outside that would purchase it at that price. So the liquidity of private equity is very, very liquid. And comparing tokens to private equity, that's, I think, something that shouldn't be done, because the dynamics of tokens is much, much more independent for the token holder. I can purchase into a property and sell from that property independently from anybody else saying anything against it. And that's how we've designed the tokenization system for real estate. Yeah.
So if we're talking now about the tokens that aren't connected to real estate, so not real estate tokens, the tokens which are the coins or tokens that are related to the project in general as a technology project,
like BST, for instance.
yeah, like BST. So we're comparing this to equity and then and this is to resemble to everyone hearing today. What is the value in buying a BSPT? What is the value in buying a property token? Because no, it's not like buying a share in a REIT. It's not like buying a. I would compare a share in a REIT similar to a project token. You're buying a token in an
Makram, I
entity.
lost.
You lost me? Are you hearing me? Dennis, you're frozen. Okay, so I lost Dennis. Let's hope that I lost Dennis, but he's back on. Yeah, you're back on. So
Yeah, I thought I lost you, but
yeah,
then
yeah.
some time passed, and basically it told me, hey, your connection just got disconnected. Anyways, I'm back.
What I was saying is the 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 beauty of buying a property token and the
Yeah.
possibility of doing that is you not buying into a project, not buying into a company with too many dynamics, and that's similar to buying a token of a project, like any token that represents a running living project, like buying an equity in a company, like buying a share in a REIT. There's too many dynamics there. There's some assets that are great. There's some assets that are not. There's some assets that are performing. There's some assets, and each has its pros and cons. Don't get me wrong here. When you're buying a property token, you're buying a single property, a part of a single asset that you can understand, that you can really monitor closely, that you can identify, and that's an advantage. Now, to go back to the subject of today, will the Bitcoin halving impact or have any negative impact as well as positive impact? We believe that it does have both, or it can have both. But in general, the market regulates itself. And in general, intrinsic values are what stand solid for the future. And in general, fundamentals do rule. Um, yes, with the news and with hypes, non-fundamental may see more increases and more advancements in price than fundamental assets and projects. But history have proven that long term, the only thing that will last and really articulate value and really represent value is fundamentally strong projects and assets. Now, um, Cool. Is there anything else you would like to add on this subject, Dennis?
On the fundamentally strong, I honestly, I mean, I heard a lot of times people talking about Bitcoin and throughout the years and failing to understand where the intrinsic value is with Bitcoin and that it's just nothing. But I think the fact that there's a ongoing force of computers tied to an electricity grid, consuming that electricity to basically have the system running, is on one side creating certain intrinsic value within Bitcoin. So
Do you agree that Bitcoin is similar to gold?
um, I think the only similarity to gold is that it has a finite amount. So there's a certain amount of gold in the world. There can't be more of it, and I think that's kind of the similar thing with Bitcoin or with any asset that has a limited supply. BST has a limited supply. You could argue that it's like gold, but and that it doesn't differ from Bitcoin as is. The only difference is that Bitcoin is has a specific protocol of how it can be retrieved um, from uh, from not being available to people.
So,
Um,
in my
Gold needs to be
opinion,
mined, right? And that's the protocol of you know retrieving gold and Blocksquare token. You need to provide certain certain services like liquidity and tokenized real estate or purchase tokenized real estate to be able to retrieve BST through Ocean Point.
yeah.
That's
But
that's
BST is a
yeah
project token. It's similar to Chainlink. It's similar to, yeah.
yeah
Do you agree? It represents a project, a dynamic of, while Bitcoin is more similar to gold because it does not. It represents. Now, here I'm not comparing it to gold to give it any positive points. I comparing it to gold because, in my opinion, gold is a crap investment, and actually I don't classify it as an investment. So here, in my view, the only value of gold is that somebody else is ready to pay for it as much or more. Now, people go there for safe havens. That's why it improves in value when things are shaken globally, economically, fundamentally, or otherwise. Yet it doesn't cash flow. It does not grow. It costs you money to hold, actually. And in general, I believe it works poorly even with inflation. So it's an okay hedge. It's not a great hedge. Yet gold um, does represent to people as a perception a store of value. And because of that, although there's 100 ways to prove against it, but this is not our subject, to 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 compare that to Bitcoin, I believe it stands right. So whoever loves gold, Bitcoin, in my opinion, has the same, because it has advantages and disadvantages on gold. I disagree that gold has finite. Yes, it has finite because on Mother Earth it has finite, but I don't believe that it's scarce. I believe there's so much gold there, none mined, and actually most of the earth metals are pretty abundant and available, and plenty of are. But regardless, each is controlled in a certain way. Now, not to go there, I really believe in intrinsic value, and I really believe in cash flows, and I really believe in assets that can give you a cash flow. And I don't have to agree and disagree with Dennis or anyone in the world on that. Yet there is one thing that we think of in a similar way, which is we believe in fundamental value rather than hype. And that's why I haven't bought Bitcoin, for example, ever, but I don't dismiss people who buy Bitcoin as crazy. Yeah, people who buy some meme coins, in my opinion, are crazy, but it's not bad to be crazy. Sometimes it's fun to be crazy. But I would rather buy a project linked coin because it holds the fundamentals of Bitcoin in a way. And sorry for every fan of Bitcoin here for this statement, but it may. Yet it holds also some intrinsic value of the fundamental project that is alive, that breathes, and that can die. No one said no. So great. Is there any other things that you would like to add on this matter on Bitcoin, or shall we go and update the community about what's happening very
Sure.
fast because we don't have much time, as well as the growth I just noticed. So I changed it to 91 million and 104 properties. We had it at 86 million and 101 properties. So the growth there, as well as many other things that are happening as we speak.
Yeah, we can go in an update, a short update for our community, sure. So, and just to conclude on the Bitcoin halving, it should happen in around 2 days. And it's an event. It's an interesting event, and why not? Why shouldn't it be in a way celebrated? Go for a beer. It's gonna be the weekend. Um, and yeah, in terms of our team, we have added 2 new developers to our engineering team, who just joined recently, Johnny and Ivan. um, and so I think that's also a great update. We're growing our kind of resources in terms of the engineering team. On the other side, we are finalizing certain or improving certain things for Ocean Point VO5, as people know. So that's in the works constantly. We have had on our test environment, we were able to break our subgraph. So it needs certain improvements, and that's a good thing, because it's better that it breaks in a test environment than it making breaking it in production and then needing to do like a hot patch release. And yeah, um, so that's on this part. What else? I know in Dubai there's Token 2049 happening, and the team is busy there. We have Simon and Ari going around different events. They were at a very interesting event last night. I think organized by one of the bigger exchanges out there. And so um, there's a lot of things happening, and a lot more to happen still. Yeah.
More assets have been tokenized, and more will be. There is more in the pipeline, and our partners and partners who operate marketplaces are also getting very interesting assets. We encourage you to go check them out and to participate in that energy. If you would like to be an ambassador and know more about what does it mean to be an ambassador,
Yes.
get in touch with us, get in touch with the team. We're available all over. Just go on to X, former Twitter, LinkedIn, or just go on to our website, drop us a message or an email, and we're or Telegram or Discord, the thing I love so much to communicate using. So
By the way, you mentioned regional hubs and ambassadors. So next week, we have the first regional ambassador assembly planned. The event will be split into two times to accommodate time zones for the eastern part of the world and the western part, let's say, equally. And every ambassadors of ours, those who are already ambassadors, those who maybe started the process but haven't finalized it yet, those who are just thinking about it, they're all invited to join this event. It's an open event; anybody can apply. I believe that the kind of applications are being done through our Hive, not Hivebright, but Eventbrite account. Sorry, and I think the link should have been shared also in our channels, like on Telegram and Discord, I believe. for people to go and grab a ticket and be present at that event. Well, they will be able to learn a lot about the motivations behind regional hubs, but as well just generally how to form a hub. And we also have an exciting announcement that we're going to make during that event for our ambassadors.
Get to meet like-minded individuals, get to meet the team, get to meet people around your area or across the world. It's always interesting to do so, and you are encouraged to get in touch with a member of a team if you need any support with that or assistance. Now, it's a great, again, being with you on another block chat, and thank you, Dennis. Do you have any other words for our community? No,
No,
guys. Very sorry.
no.
Very exciting times. We see more properties tokenized. We see more drive towards real world asset tokenization. Um, as you know, most of what we do, including all the documentation, all the docs for us are open source. We left everything open source because we want to make sure that we support the industry. At this point of time, it's very important that we all members of this industry work hand in hand to make things happen the right way. And you will hear about something that we're making open source, and we're supporting I could say competitors or peers in the market to utilize, because we want to make sure that everything we work on can add to the growth of the whole industry. Thank you all for being here. Thank you for sharing our energy. And until the next block chat,